All right, everyone, welcome back for another episode of Carnivore Trades. Today is Monday, June 13th, 2022. If you like the content, subscribe to the channel, give me a thumbs up, leave a comment, let me know your thoughts. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, here, let's get into it. Another sell-off on Wall Street after a gap down. So spiders closing at 390 and then gapping right down to 380 through the weekend. And, you know, is the bottom in danger of falling out on this? That's really the big question here. You can see on the hourly pattern, we do have a bit of a bearish inside bar here. I don't know if it necessarily plays out right now. We might get a little bit of a fake breakdown here. I think we're just too extended from that hourly moving average, but wouldn't surprise me if they try to barf some of the mutual funds into the close today. That seems to be looking like that's going to be the case here. I thought we'd probably hang around in that kind of range that we closed in on Friday, at least until FOMC, and kind of market just waiting on that kind of news. But it looks like they're barfing it ahead of time. Are they trying to force a Fed pivot? Maybe. That's always possible here. But I still think it's likely that we hold up into that time frame. So even if we puke out a little bit today, you know, nothing to say we can't maybe pause tomorrow after a big down. After 3 big down days, typically you get some type of a pause. So that's, you know, possibly in the cards here. Obviously, all eyes are still on FOMC, and we blew out the expected move. If you look at the, I don't have it in front of me, but the options move, options market, I think the expected move was 380 or somewhere in that range for the weekly option this week. Or actually a monthly option, and we blew that out on the first day. A lot of the time when that happens, you can get a reversal sometime during the week. So it is OPEX week, like we said, so that is something that we need to pay attention to. But overall, you know, I think this market is pretty vulnerable. I still think that we probably hold up at least until Wednesday. We probably have a good bounce day here. We left lots of gaps on the chart, obviously, so there is room if we were to get above 381 spot 81 on the SPY. You know, there's a good shot for a squeeze back to 390. But after that, after the FOMC, I think the market is still vulnerable. We have not seen capitulation yet. Take a look at the volume today, 111 million shares on the SPY. Friday's volume, including after hours, is 132 million, almost 133 million. And obviously today is a much, you know, worse day performance-wise, and we gapped down both days, but we're much lower today, down almost 4% on the spiders. You'd think that the volume would be way higher, and it's not. So that tells me we still have lower to go, and we're starting to see finally, you know, we haven't seen capitulation yet, but we're finally seeing the VIX behave like it should, right? The VIX has been kind of soft. We've had, you know, 3% down days on the SPY, on the NASDAQ, even 4% down days on the NASDAQ, and the VIX didn't really do a whole lot. We've seen that really earlier this year, especially in the month of May. And now we're finally seeing the VIX behave like it's supposed to, up 23% today. Again, I think we're probably a little overdone here. I think 36 gets defended. I think we probably get some type of a bounce here, but then I think the market's vulnerable after that. As far as downside targets, we'll talk about that in a little bit here. But overall, we're looking at on the charts. So we do have this downsloping trend line here on the triple Qs. That was really the lower band of both of these falling wedges. I kind of redrew this upper line here. So now you could say that potentially you have a trend line up there. But this could be short-term support here for the Qs. After that, you know, you're looking at, we did hit that 50% fib, but, you know, you're looking at that, that 200-week moving average, and that should coincide with some of these levels here. So, you know, basically right in this zone here, you got this pivot low. This is also a previous all-time high. So it's short term. I think that's where the Qs are headed. I don't think there's a ton more down. I mean, I think the market's very vulnerable here. Let me make that clear. But I don't think there's a ton more downside short term, at least percentage-wise. But that's going to be good support there on the triple Qs, that 200-week moving average with that pivot low. And then the monthly, same thing. So the 50-month moving average coinciding with that level. Doesn't mean it can't pierce. You know, when you have panic, you have heavy volume, a lot of the time you'll pierce a level. So that is possible, but I think that's kind of your near-term downside. Russell 2000 still not making a new low. And this is remarkable here, but the risk on index essentially is still holding the year-to-date and the 52-week lows here on the IWM, and we're back into that trend line. Now, there is a scenario where if the bottom really does fall out, and this trend line breaks, the Russell's got a lot more downside. And I think that will happen, but I'm not convinced it happens right away. So, we'll see what we get out here, but market's on thin ice. Again, like I've been saying, don't over position yourself. This is not the market to be a cowboy in, and I mean long or short right now. If you're opening fresh shorts here at the lows, you're doing it wrong. Like, you should have been doing it up here. You should have been doing it back here. Cowboys will get shot in this market, so be very careful. Don't overload yourself. If you're going to take a position, take a small position, take a starter position, scale into it, do something like that. But don't be, or maybe use an option or something like that where you don't have to use as much capital. Although even with options right now, the options premiums are so high because the VIX is so high. So you got to be careful in this market. You don't have to be the first one to the dance party to have a good time. So sometimes it's the best play is to do nothing. So just wait until there's clarity if you need to, but don't chase anything long or short right now. Anyways, semis here. So again, hitting this this lower trend line that we've been watching for a few months. Maybe you get a little bit of support there. Again, 1, 2, 3 down. We could easily get a bounce tomorrow. I wouldn't put it past the market for that. And then after that, I think this is where it wants to go, right around that 200 level. So you got that pivot high there. And I know it doesn't look like much, but if you look on the monthly, excuse me, not the monthly. Just go back to the weekly here. You take a little fib. You can see that's you're basically into a 50% fib right now, but a little bit lower than that. Right at that 200 even round number. It looks like that's where it wants to go right now. So that's kind of what I'm looking at on the semis. IGV, it's held up better than the semis. CRM really, the earnings report really helped out the cloud software. But this tail candle should go, and then I think IGV is down to about 250. To maybe 245, so somewhere in that range. That's where I think IGV wants to go. Dow Transport's here. I've already got it drawn on for you. So again, we talked about this level, and I said this should give you a good bounce, and you got to bounce from just over 13,000 to 14.5, 14.6 on the transport. So that level worked out, but then you have lower than that. You got a 50% fib, 200-week moving average, and this little consolidation base here. That's good consolidation. That should be good support for the transports. That's where ultimately I think it wants to go. So again, doesn't mean we can't bounce a little bit first. I think we probably will into the FOMC, but at this point, the way the market's behaving, like I said, we need to have capitulation. We need to have a washout, and we have not seen that yet. So just bear that in mind. Yields here, so 10-year, ripping higher. It did get close to, I'm not sure if it did. I know Zero Hedge was tweeting out every single tick last night on the yields, but I know it was very close to an inversion. It got very close within a couple basis points. It did widen again a little bit. So 10-year at 3.366 right now, and the 30-year is at 3.367. So, very, very close to an inversion. I mean, like that's like a basis point off. By the close there. Now, as far as the 10-year, I think max move here is right around 3.66. So if we go back a little bit further, you can see on the monthly, it's kind of the area where you found support there before. You tried to break lower, couldn't. There's your back test. Tried to break below it, couldn't. Tried to get back above it, you couldn't, and then you back tested it here. So that's kind of where I'm looking for the 10-year to go. And then you also have that pivot high right there, also coinciding with that level. The 30-year, I think the upside is much more limited. You're already into that 200-month moving average. I don't think you get much through double top. You have this double top pivot, and then you've got all this selling above that. So it does look like we're going to get an inversion, and that it should last for a couple weeks at least, and that's more than enough to, flip everything on its head. I don't think the Fed pivots just now. Personally, I think it, if anything, it'll happen in later in the year. But they'll probably have to do yield curve control at some point. That's kind of beside the point right now, but I see a little bit less upside in the 30-year just for what that's worth. As far as high yield debt, this is basically in free fall right now. So you're basically into this monthly low here, so April 2020 lows, and we have been dumping out pretty much all day. We're basically at the lows of the day here. On the weekly, you're really into this pivot here, and then you've got this green bar, but if the market goes into free fall mode, this can too. I mean, it will. So there's no real tell where the bottom is. When you had this pivot low here, it's really just comes down to when the Fed steps in on this, but this can go a lot lower. So I wouldn't even mess with this thing here. But yeah, high yield debt, obviously if yields are ripping higher, that's going to hurt junk bonds the most. The one saving grace is that Wall Street will complain to the Fed because they love selling junk bonds. So we'll see what we get out here, but nothing really looking too hot here. XLF, a nice, kind of potential bullish pattern here, just like everything else. And once that inside bar failed, we rolled right over. We're now into this pivot, or a previous level. So a previous all-time high right there. So that's good support, previous all-time high. And then I think you're, again, just like the transports and the semis and IGV, you're headed down to that 200-week moving average. So that's kind of where we're looking for. This is also kind of where you consolidated before you broke out. So right in that area, there should be good support on XLF. Broker dealers is on much thinner ice. You're probably headed to that 200-week moving average, and that's a long way to go. And then after that, it's really this previous high and gap fill. Broker dealer, and I told you guys this months ago, way back in, I think it was February or March, I said, look, if these pivots start to go, if you lose this pivot on a closing basis, this thing's done, because the only support here is right here, this little zone here. And after that, you never built any supports on the way up. So this thing's, it's, once it clears that level, it's going to have nothing really standing in its way to the downside, except for, these moving averages. So you got that 200-week moving average, 50-month moving average, and then you're down to that previous all-time high in the gap fill. So not good any way you slice it or dice it here. For those Finns home builders here, I would have loved to get in a short off on them. I had a good setup, had the price all set, and thought we would have just gotten at least an ABC up, and we just never got it. And that's the thing with bear markets. Sometimes you don't get to the price, the upside, price objective that you think you're going to get to. I was looking for it to just test this red bar, not much higher. And then you got a nice rollover there. So home builders, obviously in a lot of trouble with yields breaking out. But then again, there's your 200-week moving average. There's your choppy level. That's your breakout area, previous all-time high in this zone. So we're looking at that area for XHB. Same thing with ITB. With all these pivot lows coinciding with that 200 week moving average. Now, the thing I will say, though, is you consolidated a lot. You consolidated a lot here, so you built a base. So I think these can go lower. If they do get a bounce, it'll probably be short-lived. So just be aware of that. And VNQ, not good. So gapping below that 200-week moving average, whenever you gap below a support level like that, it's never a good sign. I think this will go down and test 85. So that's the level I've got for that. Probably in some, in the near term, really, if the market does continue to wash out, which it should, that's what we're looking at there. All right, crude here holding up. What can you say? It's been very quiet considering, but I will say, and this goes for XLE, goes for XOP, OIH, all these energy plays. They were down pretty significantly earlier. Take a look at Chevron here. Got into this trend line. They tried to defend it. So you're going to close below that 50 moving average. These are strong names. Exxon, they're strong names, but when margin selling takes hold, and it will, most likely, again, I think after the FOMC, so probably sometime later this week or next week, when margin selling comes in, these will all get hit. Crude will get hit. Nat gas will get hit, which has been holding up really well, but these will all get hit. So I stress this all the time. I say this almost every day to you guys. Don't chase these names up here. You'll get a better chance to buy them. I promise. When margin selling hits, even the strong names will get hit. Remember Amazon back in 2020? Amazon, had, Netflix, all those stocks had no better fundamentals than they did for the pandemic, but yet they all sold off anyway because margin selling filters through everything, and you have to sell in order to cover. So that's kind of the thought process there. But again, energy still a strong sector. XLE is holding up. You basically tested this high here, and getting a kind of, you kiss the 50 moving average. It's getting a bounce, but this can come down. So just be careful of that. But energy holding up. Dollar index. By the way, I still think nat gas potentially has a shot to get above $10 here on this next leg, but we'll see what happens. Dollar index continuing to surge. So again, that bear flag kind of theory we were talking about obviously didn't happen. 1, 2, 3 up through double top. You might get a pullback tomorrow. If this does break out, though, I'm looking at about 108.50. So that's where I'll be looking at the dollar for major resistance here. That's just the number I worked out. If it does break higher. If not, then we'll see. We'll reevaluate it. But I thought we would get a little bit more back in filling in the dollar before the move higher. Same thing with yields. The one thing I will say, though, is that at some point, not so much the dollar, but with yields, eventually this stuff is going to cause pressure on consumers and so on and so forth. So we might still have inflation in food and energy, but other areas are going to get a hit. And that's the bullish case for bonds, right? So even though you have inflationary pressures in food and energy, if consumer discretionary spending is crashing, that's kind of the bull case for bonds there. So in a sense, the market kind of does the Fed's job for it in a way. I don't know if it's going to do it that much, but it'll do it to a degree, and then the Fed will have to step in and do more. China said this morning that they, quote unquote, wouldn't hesitate to attack Taiwan. Who knows with the Chinese government, it's very, rhetoric driven. But if that does happen, I would expect the Fed to pivot immediately, because there's no way that we can fund a war without the Fed. So just my 2 cents there. But in any case, dollar index, 1, 2, 3 bars up. We'll see if it gets a pullback tomorrow, but 108.50 is the real level I'm looking at. Gold here. Okay, so big reversal on gold, down 2.6%. Raced all of Friday's move. And again, this goes along with margin selling. So gold, can be aware, gold has held up really well, but this is also can be a victim of margin selling. And you have an engulfing reversal there, so it could go lower. Basically what this means to me, or this is the way that I interpret the market's reaction, is that yields are up and we're looking for, the market is now expecting a recession. That's kind of the interpretation I get from gold. And you can see that more so in silver, which is more an industrial metal, which is down more, down 3.72%. Platinum, which is reversed, completely negated this breakout. So now back below this trend line. I think platinum has a lot lower to go. I've been telling you guys that. It got a nice bid there, but I still think it has lower to go. Palladium, we've been talking about, has been struggling with that trend line there, and now it's rolling over here. It might have some support here at about 1700 short term, but same thing on copper. I really would have felt better about it if it got down to 390 first before it did this, but it got up to that 450, 460 area and now rolling over. I still think this is probably headed down to 390, 385. And again, these industrial metals are showing you that the market cares about the recession right now. Now, gold has held up better. Gold's outperforming stocks, it's outperforming crypto, it's outperforming everything except for the dollar and bond yields, which, technically it's outperforming bonds. So it is doing its job as a safe haven, which is a good thing, but that doesn't mean it can't head a little bit lower, especially if we get margin selling. Gold has been used before to hedge against margin selling. That's what it's there for, right? It's a store of value. You hope to, you invest in it with the thought that I never want to have to sell it, but if I do, it's there. So that's the thought process there. Just sharing that with you. Anyways, let's flip over here because everybody wants to know about Bitcoin. So here we go. Been saying this for a long time. Bitcoin will go back to 18,000. And again, I'm just going off the charts here. You never back tested this breakout. If we look at the monthly, the all time here, well, you can't really see it on this chart. It's not the wrong one, but you guys know, it went to 20,000 just about in 2017. And then obviously we broke through that in 2020 and we never back tested it. It just never got back tested. Just like how the SPY never back tested that gap above 400, I said this is not going to be a good thing. It's going to head lower. It's going to back test this, and the longer it takes to back test, the more painful it's going to be. Well, that's what we're looking at here with Bitcoin. Again, down, inside bar, bearish, down, bearish consolidation, down, inside bar, bearish. I thought there was a good chance it may have of returning to maybe 35, 36 short term, but rolling over now. And again, here's your head and shoulder. Just to draw it in. These other trend lines are kind of irrelevant right now, but right there, oops. And you just take a target for that simple calculation. It'll take you down to about 18,000. On Ether, I've showed you guys this trend line here, this head and shoulder pattern before. The target on this is, believe it or not, is around 600. So Ether has got a lot lower to go. Ether took out the lows way sooner. Again, I've been telling you the best of breed here is the only one really worth watching right now. And yeah, just a bloodbath. It's acting like the leveraged NASDAQ, the whole narrative that, oh, it's digital gold. If that does happen, it's not going to be for a long time. Crypto needs to have a .com moment. And we could be, starting to experience that now. But, this is, again, it's just behaving like the leveraged NASDAQ. It's really what it comes down to. I still think crypto long-term is probably a great investment, but just like Amazon was in 1999, but before that, it had basically a 90% washout. And I think that's kind of what we're seeing here with crypto. And, again, a lot of these cryptos, do we need some of these, these altcoins that are trading at fractions of a penny? I don't think so. I think if this is going to be the case, there's going to be 10 to 15 best of breeds that hang around, and the rest are going to be basically washed out. Anyways, looking for an 18,000 test here on Bitcoin. Maybe if we really panic, it could go down to 12. We never back tested 12 on the way down either, or on the way up either. So that would require, the market to probably really wash out as well. But in any case, you see in there what happens with leverage. And by the way, a lot of people have their homes mortgaged and leveraged on Bitcoin. So just bear that in mind here. As far as how bad things get. S&P down now 4% here. Let's see, taking out the lows of the day. We had kind of a bearish inside bar on the hourly. Wasn't so sure it would play out here because we were a little extended from that 20 moving average. I think we get a bounce into tomorrow, or at least a pause day, and then we'll see what the Fed says. I honestly don't expect the Fed to really say much. We had the hot CPI print, and if they were to pivot now, I think it would really... It would kind of discredit them to a degree. But at the same time, I think regardless of what they say, the market is going to want to wash out here. And then I think we'll get our summer relief rally, which should last a couple months. So we'll see what we get here. That's kind of my thesis moving forward. As far as downside on the S&P, again, like I said, I think it's a little limited. Doesn't mean we can't exceed my targets, but I don't see us getting much through, I would say 360, 365. Got a previous all-time high there. Maybe it goes down to the 200-week moving average. It's possible. The 50-month moving average is right in that area. I think that does get tested, but I don't think it happens till later this year, honestly. That's just my opinion. I think we have one more good leg lower, and then I think it's a summer relief rally, honestly, but again, it's tough. Like, don't be a cowboy in this market. Be smart. Don't overposition yourself. Scale into things. If you're going to pick long, wait for serious volume spikes. Like, this is not, we're not even taking out yesterday's volume or Friday's volume yet, and we're down 4%. So we're not at capitulation yet. The VIX has not made new highs yet. But again, be careful, scale in, and please don't short down here. At least if you're going to short, wait for a bounce, because you can get your head ripped off very quickly. The S&P can be up 5-10% in a couple of days if we get, if the Fed does pivot. Okay, so bear that in mind. All right, guys, anyways, and wrap it up here. You guys take care. If you guys are members, I'm going live at 4:30 for private stream, so stay tuned for that. And anyways, come find me on carnivoretrades.com, and I will talk to you all tomorrow.